it's your boy Felix, and welcome to a new series on this channel. And on this series, I will be analyzing 5 interesting and amazing cryptocurrencies that I feel might make you guys a lot of money. So if you like what you watch, don't forget to like, subscribe, and comment. See you guys in the chat. And currently, I'm on the monthly time frame, and I'm analyzing the Bitcoin USD market. The first thing nowadays, though, whenever I'm giving a chart, is to go to the highest time frame, because I need to see what is happening within their assets. You know, the highest time frame gives you the overall picture, or the overall direction of the market. So it's like the market is like the backbone of that asset. So going up to the highest time frame, it makes me see the direction of the market and to predict the next direction of the market. And in this case, I always make use of the Elliott wave, and whenever using the Elliott wave, they have to be a trend in the market, because Elliott wave is only used whenever you have a trend. So if the market moves from point A, let's say the market intends on moving from point A to point B down here, it won't just move in a straight line. Of course, once you know the market making this large move, it's an uptrend, but it won't just move in a straight line. Instead, what you have is waves. It moves in a waving. So what you have instead is that you have waves. The market moves in waves, and you have whenever you have a trend, there's always a 5-wave pattern, and within that 5-wave pattern, we have 3 motive wave that are in direction of the trend, and 2 waves that goes against the trend, which we call the corrective wave. So you always have a 5-wave pattern. There's the first wave, second, third, fourth, fifth. So this is the point A to point B. It moves in a 5-wave pattern. Vice versa for excuse me, vice versa for a downtrend. It also moves down in a 5-wave pattern. So you have a bearish wave 5 pattern. But what comes next? The question people always ask is, what comes next at the end of this 5-wave pattern? Do you have a continuation of 5-wave pattern, or what happens? Usually what happens is that 2 scenarios plays out. The first one is that the market could attain a reversal. So what happens is that you could have, at the end of this 5-wave pattern, you can have a 5-wave pattern also, a bearish 5-wave pattern that will lead to the break of the structure. This first scenario is what we call, this first case is what we call a reversal. So the market changed its trend entirely. The second scenario is that you have a retracement instead of a reversal. So a retracement is always a 3-wave pattern, which is like A, B, and C. And a retracement never leads to the break of the previous structure. So basically, this structure down there will be respected. There won't be a break of that structure down there. That is one thing about retracement. So what happens at the end of the ABC pattern, which is a 3-wave pattern, you have a continuation of a 5-wave pattern that will lead to the break of the structure. So the difference between a reversal and a retracement is that a reversal will lead to a 5-wave pattern that will result to the break of the previous structure. On the other hand, the retracement is just a short pause in the market and a continuation of the previous trend. So what we have is that, how do I apply these ideas on what we have today, which is the Bitcoin USD? The Bitcoin USD has been making, the first thing I always said is that go to the highest time frame. That will give you the direction of the market. If the market is making higher highs, higher lows, it's an uptrend. If the market is making lower lows and lower high, it's a downtrend. So in this case, the market has been making higher highs and higher lows for a while now, since 2016. this has been in an uptrend. So when I have a trending market, it unfolds in a 5-wave pattern. So with the aid of my trend channel, I can get the 5-wave pattern. So this is the first wave, the second wave, third wave, a retest, the fourth wave, and the fifth wave. Down here. To be sure if I got the third wave correctly, I can also use the trend channel again. So this is the first wave, second, third, fourth, fifth. So I call this the fractals of the market. So this is a smaller wave. This is the fractals of the large, bigger third wave. And this was the fourth wave and the fifth wave. So what comes next after the 5-wave pattern? You have two scenarios I told you about. Either it's a reversal or a correction, or a corrective wave, like a retracement. So if I treat this market as a retracement, which is a 3-wave pattern, what you get is an A, B, C pattern. In case you haven't watched my videos on using Elliott wave in trading, I think I did a video on Elliott wave. Please, I recommend that you watch the video. It will be very helpful when towards you understanding what I'm doing. The A wave could either be a 3-wave pattern or a 5-wave pattern. The B wave is always a 3-wave pattern, and the C wave is always a 5-wave pattern. So if this was a retracement, this A wave is not of our interest right now because it has been formed, except I want to check to explain to you guys the A wave pattern, but I'm trying to make this video as short as possible. So you can take your time, like a take-home assignment, and try to see what's happening within the A wave. Is it a 5-wave pattern or a 3-wave pattern? The B wave is always a 3-wave pattern. My interest right now is on this C wave, which is always a 5-wave pattern. I'm on the monthly time frame, and I can't really see what's happening on the candlestick because I can't really see the shape of the candle. So I'm going to go down to the lower time frame, like the weekly time frame, so to see what's happening. On the C wave, which is our point of interest, what to expect a 5-wave pattern. Already I could see a form of consolidation around here, down at this point, and over here too, but I can't really see the candlestick very well. I want to see a clear picture of the candlestick, so I'm going to go down to the daily time frame to know what's happening. So on the daily time frame, I think if I use my Fibonacci extension tool, so down here, this point, so definitely this is a third wave. So this is the first wave, the second wave, the third wave, the fourth wave, and we're on the fifth wave right now. So currently our interest right now is on this smaller fifth wave right now. So what I can do right now is I can zoom in to this area, this region down here, to know what's happening. This is the 5 wave. This is a 5 wave. The 5 wave is always a motive wave. So you have in a trend you have a 5-wave pattern. After the 5-wave pattern, I'm just trying to iterate again. After the 5-wave pattern, you have 3 motive wave or 3 impulsive wave, and two corrective wave that goes against the trend. So if this is a trend, this is the 5 wave pattern. This is the fifth wave, wave 5, wave 3, and wave 5 and wave 1. So wave 5, wave 3, and wave 1 are motive waves, like the impulsive wave, they move in direction of the trend. Wave 2 and wave 4 are corrective wave, they go against the trend. So currently this is the wave 5. So we'll expect a 5 wave pattern within this wave 5 because it's a motive wave. The corrective wave are usually 3 wave pattern. The 4 wave, wave 4 and wave 2 are 3 wave pattern, while wave 1, wave 3 and wave 5 are always 5 wave pattern. So this is a 5 wave pattern to expect down here. So we're going to count the 5 wave pattern. At the end of this 5 wave pattern, that's when we can then expect a bullish move in the market. So I can't really see much, but let me just zoom in. So I should go down to the lower time frame, the 4 hours time frame. I can see more information about the market. So on the 4 hours time frame, to be honest with you, the market is looking a bit like too choppy for me right now. You have so many candlesticks happening and so many things going on. So whenever I have situation as when I have something like this is one of the hack I do. It sounds ridiculous, but it really works for me sometimes. I'll go back to the weekly time frame and I'll then try to get the shape of what's happening down here on the weekly time frame. So on the 4 hours time frame, I have too many candlesticks down here, and it's a bit very difficult for me to try to zoom in and trying to pinpoint the shape of the market. So if I go to the weekly time frame and I'll try to see if I could get anything. So clearly you can see this is what our point of interest. I could see the shape already. This is the first wave, the second wave, the third wave, the fourth wave, and the fifth wave. So we've been able to like go down, up to get the shape. This will reduce the work, so that will just reduce the number of candlesticks happening. We've been able to like reduce what's happening on the screen, because now my point of interest right now will be on this smaller wave down here. Put it down in white color. So my interest down here will be on this area down here. So I have to go down to the 4 hours time frame to know what's happening down. So here, this is our interest. So I know from down here, from here to 3, 4, 5, put in green color. I could see that I don't have to get the exact wave. I don't have to get, oh, this is wave 1, wave 2, wave 3. I know from this point to this area here, you have wave 1 and wave 3 because of it's so much move down there. And at the end of this third wave, what came next was a very deep retracement that came and tested this region back and broke the structure. You can see the break of structure. So definitely this was a retracement, the fourth wave. So I don't have to pinpoint the exact first wave or second wave. I know because that has already happened. That has passed in the history. I know that first wave and the second wave and the third wave are from up to this area down here. So currently we're on the fourth wave, on the fifth wave, this smaller fifth wave. So this is how I'll be able to scale it down to get a very good entry. Because right now I'll be looking for a buy. Like I said, if I'm treating stuff as a retracement, at the end of the C wave, which is what we have here, at the end of the C wave, which is the 5 wave pattern, this is the fifth. At the end of this fifth, what comes is a move that goes to a continuation of the trend upward. And I will show you guys my profit target. So this is the fifth wave. I'm to expect a 5 wave pattern within this fifth wave. So I can't really see what's happening. I'll go down to the lower time frame, the 1 hour time frame. Do you want? Do you want to be safe? What I can do is going down to lower time frame. I could say right now I'm expecting to buy Bitcoin, but in order not to like try to pinpoint the entries, trying to read the candlestick pattern here, I know at the end of this 5 wave pattern, what comes is a bullish move. And if it breaks the structure, it means that the market is in an uptrend. So I'm going to buy. So definitely, once the market breaks this structure, then it's a bullish move. Then what am I waiting for? It's time to buy. I have to buy once the market breaks that structure. Within this tough year, there's going to be a 5 wave pattern. But I think, I'm not sure. What once I also do another hack is that I put this in a Heikin Ashi candlestick. It just tries to filter out the noise for me. And let me go back to the 4 hours time frame to see what's happening there. If I zoom in, so I think what's happening is this is 1, 2, 3, 4, 5. But since I'm investing in Bitcoin, I'm not trading right now. I don't really care much about what's happening. I might get, because trying going down to the lower time frame to get that best entry could be you might end up making mistakes. So what I'm waiting for right now is a confirmation. Right now is a break of structure. So I could wait for the break of this structure. I could wait for the break of this structure, or I could wait for the market to break this structure and retest the structure. So I'll enter at the point of risk retest and I'll then go. Obviously, this is like a textbook explanation. The market won't just come down here and just perfectly retest the structure. It might break down some fake breakout and all of that, but still you trying to read up the shape and trying to understand what's happening down there. So right now, in order to make a mistake by just going down to the lower time frame and trying to get the best entry level, what I could do right now is just to wait for the market to just break the structure. And I know at the break of the structure, that will be a good indicator for me to buy this market. And my profit target, I'll have to go up to the highest time frame to get my profit target. So my first profit target is at this level. The first profit target will be at this level, which is at 36501.10. Why put this level? Why didn't I just put this level? Since it's a retracement. Since I said my explanation that a retracement leads to the break of the structure. Why I did that is that I'm a conservative trader. Yes, I say this market is a retracement because I'm treating it as a retracement. This is a Bitcoin. It's a coin that was from not quite long. It doesn't have up to like 20-30 years of back history. So we don't have enough information for us to say that this is like for me to be firm that this is a retracement. It could also be a reversal, and if this was a reversal, what to expect is that this will be the first wave, the second wave, the third wave, the fourth wave, which will retest the structure that was broken, and the fifth wave. So this is a break and retest of the broken structure. So I'm seeing this market as a retracement. I think it's a retracement, but at the same time, I'm also putting at the back of my mind that this market could also be a reversal. So that's why I'm going to put my first target at this level. So when I see a break of enough evidence for me to know that this market is a full retracement, then I can then probably enter on the break and retest of this structure. So for now, my first profit target level will be at this level, and then from this level, I'll become very strict with my stop loss, putting my stop loss according to the structure of what the market is giving to me until probably if it gets to this level. So this will be my second profit target. Then probably I'm gonna get out of the trade and keep the profit I have and observe the market. And the market is still showing me signs of an upward move. My third profit target level will be at this level. Then the next thing is for the market to break and retest of this structure. Then I will enter. But for now, I'm just gonna like first of all get this profit down there, which is a lot down here, which is like it's on a weekly time frame, so it's a much distance from down here to this level down here. So right now I'm looking for buy on the break of this structure. Like I told you, if you go down to the lower time frame, you know what I drew. Then my profit target level will be, the first profit target level will be at this level, second on this level, and the third at this level. Thank you guys for watching.